Hey guys, how are you doing? So it's Sunday here, and yeah, for this video, I want to do something that we don't do often, but it's a very powerful tool in my opinion, and that is measuring the indexes that we love, gold and silver, uranium, silver and gold as well, against its 200 weekly momentum, a weekly moving average, which therefore gives us a momentum. And that can be very, very powerful in order to get in early, but also when to see when you break out momentum to the upside. And that is almost always causing big, big, big moves in that underlying sector or ETF that you're looking at, because it means that you're getting a long-term breakout um, against its moving average, which when it's set up correctly, you can start to see some really, really good stuff. As always, follow me on the Substack. Again, that is where we do the stock picks, trading targets, daily updates, gold, silver, uranium, platinum, and more. So let's dive in. And again, thank you all for tuning in. And for this one here, I haven't been doing any TA before. I mean, I didn't, do the channels and all that before. I'm just going in fresh here, basically. So what we have here is silver. And you can see here we have a bit of a weird line here, and that is basically the silver price measured against its 200 weekly. We are on the weekly here, so you can see that. So we are measuring the price against the weekly moving average. And you can see structures here, even though it's a kind of like a ratio. But again, when you're below the zero line, you're basically, of course, below that weekly average, and therefore you're still in a downtrend on that time frame. So when you get certain breakouts, right? When you get certain breakouts here, you're still fighting against the tide, the downtrend coming down, right? You're still fighting it. And the higher up you get and the bigger, the breakout you're getting, then again, you're getting a bigger move. Um, and you can see here also we did some breakout here and in early this is back in 2019, and we had the COVID, and then we blasted again, and then we had a big one going on, a very, very big breakout here, because now all of a sudden we start to take the 2011 highs down to the 2020, and then you can see again why that breakout in March, April 2024 was the big one, is the big one, and we're still climbing higher. That is where you're breaking its 5-year, 4 or 5 year pattern here. And this time we are coming, from a point where the price is way above the moving average and is correcting. And then finally we're breaking out again against its, its moving average. Therefore, we start a big outperformance. And then after that, we broke its 15-year momentum trend line. Therefore, silver now is heavily outperforming. And any setup that you get here on this kind of momentum measure is a buy, because you're basically buying pullbacks on momentum when momentum is going up. So silver is looking really, really strong, not gonna lie here. And of course, we have a big one. We have a major one here, which we are pretty far away. Of course, we are. That's the 1980s to 2011, the past prior major highs. Remember, this was $50 silver, $50 silver, but in momentum, again, let's say we touch for the third time potentially, and we could get the pullback, and then we have again the big stuff happening. So it can be used in the same way, technical analysis here, and sometimes you get some really beautiful structures, which you will see on the SIL and those guys in just a moment here. Gold is a little bit different, but again, just look at how well it's outperforming its 200 weekly. So the momentum here is very strong. Again, could it be that we're going to correct here? Yeah, it could be. And that just means that the weekly, the 200 in this case, is catching up, right? It's having more pace compared to price. That could still happen, but again, I want to just pinpoint here that we're still in a very bullish long-term environment. Very, very much here. 2011, 2020, breakout here, back test, rally. consolidation here at the moment. And even before the breakout, you could see that you had a little bit of a wind up here. And again, we were breaking some stuff there, right? April, February 2024, and we were above the zero line, meaning we already there had possible positive momentum. Perfect. Absolutely perfect. So yes, again, gold here is on the long-term time frames, massively outperforming. It's a 200 weekly moving average. Good. Platinum looks very similar, but again, also we can see that contraction which we had here for basically 4 years looks somewhat similar to its again, depending on how you draw it here, but it looks somewhat similar to the price, right? And that breakout there, May 2025, means that we are in a raging platinum bull market. You're basically just oscillating around its zero line, just completely resetting momentum. And we said, anyway, it's going to break. It's going to be a trend-setting moment for many years on platinum. And yeah, momentum price is absolutely killing its weekly average. Of course, the weekly average is still trying to curl up, but it takes some time to gain momentum after such a big move. So again, if we are getting whatever structures we're going to get here, let's say we correct even more, but you buy into those breakouts if they form. They don't always form because it's a ratio, but here you can see we also had a breakout above its 2011 and the 2020 highs here, or 2021, my bad. And that is, of course, very nice. And I want to show you something here as well before. No, that was a different chart. I thought we were on a different chart. So yeah, platinum looks, again, there's nothing wrong with platinum, even though we haven't been doing anything for basically 2 months. It's still just getting started, in my opinion. And we are very, very bullish on platinum. Palladium is a little bit different here. It has come down very much from the highs, and we can still see here we're basically, pulling back against its 200 weekly here. So again, we are still finding the momentum to the downside. So overall, on the 200 weekly, again, the weekly time frame, we're still long-term, fighting that downtrend. But again, I want to show you that again, even though, again, now we don't have a structure per se. Maybe we have a little bit here, right, with that inverted head and shoulder, maybe. But you can see here that the momentum breakage right there, right around here, you saw the momentum turning positive. We went from 700 to 3,000, right, all the way up. And same thing here again, you can see momentum breaking down right around here. There, you broke down there in August, roughly August 2021. You made a huge puke down to its 200-day backtest momentum. So you can see that we can use these types of ratios big time. Gold and silver ratio. Again, same thing. You can see the structures here. And I just wanted to go back here. What happened here in early 2020? What happened? Yeah, you know exactly what happened. Massive breakout in momentum to the upside, where gold and silver ratio, ran heavily. And that was, of course, during some really, really bad times. So, but also here you can see that there are structures before that even, right? This looked very bearish, but then we had the COVID. And now again here, I think we have a trend line saying that when and if we start to break this type of trend line here, right? The lows, once we start to get below the 200 weekly, right? I think we're definitely confirming that momentum is breaking down big time on the long-term time frames. And what is good is also we had that big pop there during the Trump tariffs. Momentum to the upside, things were really bad there as well, remember? Markets were crashing. Testing, tried to resume, nope, back below. So for now, from a momentum point of view, this is very bearish if we start to trade below its lower fractal trend line here. Then again, I think it's game over for this ratio, and even more game on for gold and silver, and even more by a huge margin, miners. Yeah, miners. So we still within that wedge, but typically once you have a false breakout, you go to the other side, you bounce a little bit. See, this will be the third. You bounce and you break on the fourth. Dixie here. I just want to show you a big floor in momentum. This one here, the Dixie cannot start to trade below that. That would be devastating. Trading below this level here, which goes back to basically 2009. Look at that. You can see it here touching almost. Let's see inside. We're touching again here. If we start to trade below, it opens up a very big move to the downside, meaning the Dixie is going to underperform heavily its own 200 weekly moving average. And even here, you can see it start to actually fail, right? We are losing momentum going back 30 years. 30 years, we're losing momentum to that. And I will say the last nail in the coffin and the confirmation becomes when we clear this yellow zone here. Then, again, the Dixie price of the Dixie is going to underperform heavily its 200 weekly moving average. And again, I just want to pinpoint here, you can see structures as well. Even though we not looking at price, you can see some structures here, right? That is where, again, this was in April 2022, 2002. Look at that momentum breakdown here. And when was that? Right there, boom. And the Dixie for a very long time. Game over, right? Absolutely game over. So it can be used. And I love to do that. It's extra confirmation. So if you see momentum structures coming in that are very precise, they should be taken very importantly. Here we have the SIL. Yeah, yay. So to me here, let's look at the highs. We had a big high in 2016. We had one big in 2020, as you know. If we then do this, look at the early little peak above here. Again, it typically you stall for a bit, but when we leave that trend line here for good, right? When we do, let's say we could stall here for some time. When we do, again, silver miners is going to outperform its moving average. Again, it doesn't mean the price will go up or down. You know, it's just compared to its moving average that that you're underperforming. But now we're peaking a little bit above. We have run quite far, I have to admit, right? This is a very big move. But again, we are still very happy within all this. And you can even say we are, if we take this to the low point here, you can see the channel, right? So we are actually trying to break out from a 10-year momentum channel as we speak on silver miners. That is not to be taken lightly, my friends. Not in my view, at least. SILJ. Oh, that is incorrect. Again, there's not a whole lot here that we can draw as of now. But again, I just want to show you big technical breakdowns in momentum. Look at that. This is in June 2021. We're going to check. Look at that. We broke down heavily here. That was the breakdown here, all the way up there. So even before the price broke down, we had momentum saying, hell no, we're going to go down. And you can see it has been a very long grind, but we're now back to basically that point again. So yeah, momentum can be used. And also, again, you can see that, hey, trend lines here, look at that. I would be pretty sure that that break there in March 2024 is a big one. I know it is because I know that, April 2024. And this was all the way down here where we said this is the beginning of a major move in miners, right? April 2024, just 1 month before, depending on how you set the lines here, 1 month before momentum said, yep, it is go time. So that is where we stand. And that is why I love to use these kind of tools every week. And we have the same one here as well. You can do the inverted head and shoulder in momentum. Of course you can, because that is, again, a ratio. Therefore, you can use it. So momentum here still has a lot of runway, right? It has a lot of runway still in order to meet that measured move, right? So I love it. These ratios are fantastic. GDX, you can see here one very large horizontal momentum level has been broken, and we're peaking above, or we are above, right? Um, that's a really good place to be. And same thing here again. You can see this again, April 2024. We had a big momentum break above the zero line, which is good. The GDXJ, not a whole lot with regarding to the upper side. We haven't really been, again, you can see we have been breaking the prior high from 2020, which is always good, but we don't really have a structure as of now. Again, remember here, look at that momentum break. You know, you can see it over here, early 2024. The miners started to say, hey, I'm ready to go. I am ready to go. It does look a little bit, however, that we have some sort of expanding momentum, right? Which is a bit more difficult, but that could suggest we have more upside until we start to reach, you know, the maximum momentum that we can gain at that point in time. URA, unfortunately, we don't have too much data because we're using the 200 weekly. Therefore, basically, it has to, we have, until we have 200 weeks, we don't get the first data point, and that is 4 years, basically, even 5 years maybe. So, but you can see that, again, momentum was slowing down until 2020. And again, 2020, that was also when we, at least personally, I started to buy a lot of uranium stocks at that point in time. So even though the price went down, right, it was devastating, completely devastating. It went down, 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 down. But in relation to its overall market momentum to the downside, we were actually gaining, and we crossed positive, and we actually had quite a good year there. And this is the first high after that momentum change where we went from negative to positive. And look at the beautiful, beautiful bull flag that we have just been breaking out from in June, and where the Trump tariffs was, you know, the hammer into that lower trend line. And now we're up here, suggesting that we have a lot more room to run for URA compared to its upward momentum. We could correct here a little bit, but overall, we are breaking out from a large 4-year bull flag, excuse me. And that typically leads to a lot higher prices. And depending on how we point these, we could do, again, different things, right? That could be some very, very big targets for URA in momentum terms. CARPEX, again, look at the beautiful structures, right? Look at the beautiful ones here. So even though, again, you can actually see here that it started to say June 2016, we go down. It were suggesting that, hey, I'm about to go higher, but you were there and not really looking at, hey, I'm going to buy here. You would have gone in, you know, roughly a few months later, right? So momentum was saying, I'm breaking out. I am breaking out. Same thing here, right? It said you're going to buy here, even though the breakout happened a month later. And what we're looking at now is basically this whole channel here. And when that breaks out to the upside potentially, which I think it will, that is my bias. That's when we break for the real first time, we break momentum when we are heavily above, when we are heavily in plus momentum to the upside, where these were below the 200 weekly, so they don't gain as much power. But these coming from the top and down, they generate the most momentum in price, both on a price chart, but also on a momentum chart. So that is all I have, guys. Remember to subscribe and all that good stuff. Check out the Substack, and let's see what the week brings. So yeah, stay tuned, guys. Bye.